Comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs. We're joined now by our colleagues, Carol Massa, Tim Stanovic. We go, of course, from radio to TV to YouTube to dissect what is the best two-day winning streak. This is all the way back in April 2020, Carol.
It's pretty remarkable. And you know what's really remarkable? Check out anything in the hospitality leisure industry. I'm looking at hotels are up about 4% in today's trade. You've got airlines up about 7%, and the gambling casino companies are up about 8%. And this has to...
Partying.
I know, exactly. That's where we should all be. No, but this has to do with the expectations that maybe the Fed isn't going to be so aggressive after that JOLTS number. That data came out falling the most in August by the most since early in the pandemic. So maybe the Fed doesn't need to be so aggressive, Tim.
Wow.
Maybe.
Wow.
Maybe. That's the question.
What's giving you that confidence?
You know what? It's one-day trade. That's all I'm going to say.
Okay.
Well, the question is, I mean, how much of this does represent the thinking that there will be a pivot, the sort of, dovish news that we got from Australia's central bank, or that JOLTS number that actually, saw 1 million fewer jobs open, or is
1 million fewer, wow.
Yeah, I
So
know,
the labor market tightness is over?
Did you not read in this morning?
I read it actually pretty closely.
10 million.
I see we have still at one point, the ratio of job openings to actual available workers in the labor force. Did you look at that number?
I saw that number too.
Yeah, that's not called slack, my friend.
Yeah, you're right, but it's going in the right direction, I think many people could argue.
Right direction, and certainly in the market likes to
Is one data point a direction, or is just a point in
two,
time?
if you look at the ISM yesterday.
Oh, Romain.
There's at least two data points that give some enthusiasm.
So Romain, what you're saying is this is, probably short covering more so, or that people who are buying aren't necessarily correct?
Well, we know it's short covering. That's a big part of the rally. I mean, the other part with regards to whether this is going to sort of lead to a pivot by the Fed, I feel like not only do we need more data, but more importantly, I think we actually need to hear from some of the Fed members themselves, because last time you heard from them, Carol, they were still banging the drum.
Don't front run Carol, because she's going to listen. She's going to bring us some conversation from a key Fed member.
You got to read the messages.
Ignore them, but we're up more than 2% on the NASDAQ. Taylor, take it away.
I'll take a look underneath the hood a little bit, take a look at where we are on the sectors. It is a bullish theme, and this is breadth. Carol, we do that for you. Take a look. It's energy, it's materials, it's discretionary, all up about 3.5%. And half the sectors have 100% of the securities in that sector that are all higher on the day as well. So it is going to be a big broad-based rally here.
Yeah, and you're seeing that. Take a look at shares of Ford. I thought this was interesting. Of course, they came out with their auto sales numbers for the quarter. Not only were they good overall, but more importantly, the EV sales specifically came in a little bit hotter than what the street was looking for. Those shares up 7%. Hasbro shares have been all over the map. They were up, then they were down. They're now back up about 2% as the CEO outlined sort of the long-term path for that company, which is apparently going to involve a lot more licensing deals here as that company really tries to rewrite the ship here. Netflix shares are relatively unchanged. It had actually been one of the few decliners here on the day, but now up fractionally, less than 0.1%. And keep an eye on the Real after that big Poshmark deal, Poshmark being taken private here, a Real, Stitch Fix, and a lot of other peers now are rallying on the day in anticipation that maybe they could be next. Real up 18% here on the day.
$1.70. I can't even get on the subway for that, right?
$2.75.
No. Yeah.
Meanwhile,
Carol doesn't ride the subway. What's she talking about? No.
It's getting busier, people. Meanwhile, because maybe more are being tempted back into the labor force. Look at this number. We were just talking about it, the JOLTS data, the fact that we are seeing a big drop-off in the amount of claims being made at the moment, the amount of openings falling by over 1 million. But as Romain so rightly said, look, there's still a lot of jobs out there. There is still, but also an awful lot of people to be taking them at the moment. So it does feel like this tightness persists, even though for this one data reading has given the market some hope.
Exactly.
Did you hear what Mary Daly said a little bit earlier today?
Stop it. Jeez. It's like being around my family at home. Yes, Mary Daly, president of the San Francisco Fed.
How close we are.
She did. We are close. She did make some comments today. She reminded us that the Fed's going to continue to raise rates to rein in inflation because she is worried about the pain that it is imposing on so many different people. Here's what she had to say. Romain, listen.
Right now, the pain that I hear every day, the suffering that people tell me they're going through is on the inflation side. If we let it go, it's a corrosive disease. It's a toxin that erodes the real purchasing power of people.
And then, of course, is Mary Daly, the president of the San Francisco Fed, speaking at the Council on Foreign Relations. She did also think that the Fed could continue to raise rates, rein in inflation without causing any kind of severe recession.
How do you do this in a way, though, that doesn't lead to widespread job losses, especially if we do see core inflation being stickier than many people think? That's what Abhay Deshpande told us yesterday. He's very concerned that yes, we're seeing a deceleration, but it's not happening fast enough.
I mean, the fact that we've had the high yield, well, the ETF tracking high yield going up for a couple of days, it feels as though all that concern about systemic risk, about worrying of a hard landing, about the fact that we're not going to be able to keep a fully functioning financial market, we just put to one side, Taylor, just for the time being, and we're going to get very optimistic all about the hopes that central banks will start to believe the markets or be forced by the markets.
And I think that is where that drop is, because we've been here a few times before, and then you have Fed speak, they come out and they say, the market made up the pivot. It never existed. We never said that. And you guys have talked yourselves into believing that there was a pivot, and you get some big hawkish rhetoric. So that is just sort of the only sort of signal that I'm waiting for of, is there a pivot, or did we kind of make that up?
Yeah, well, I mean, look, we need more data points. We're going to, of course, get the big monthly jobs report at the end of this week and another CPI report next week here. But all in all, I mean, even if you are seeing a trend, meaning sort of softening in the labor market, maybe a softening in inflation, I don't think anyone's expecting it to be anywhere near the target rate, which last time I checked on inflation, the Fed's target rate is still right above 2%. I mean, they don't tell you exactly what it is. And we're still a long way off from that, even if we are moderating.
Right, but don't you think it's interesting? Listen, we've got the Fed memo that the Fed's going to continue raising rates, but do they start to maybe temper back in terms of how aggressive their moves are? I do feel like that there's a different tone to the conversation, or at least Fed officials saying, yep, we're going to keep raising rates, but they keep injecting things about financial market conditions. Or I go back to Evans, talking about maybe they top out in terms of raising rates, early next year. I feel like the conversation shifting a little bit.
But I mean, just as far as the price action that we've seen today and yesterday for that matter too, I think I would feel a little bit differently about the rally if it were just confined to equities. Like if you had still seen the yields kind of hold up, maybe come down just a little bit, but to see them drop basically 30, 40 basis points over the last few days at the same time where we're getting this massive rally in equities just seems a little bit askew.
Hey, Romaine, did you hear what Mary Daly had to say?
I'm going to check. I heard she said something interesting. And I heard it's on the Bloomberg terminal.
Yeah, you should check it out.
Yeah.
All right, guys, we're going to be back. One happy family on radio, on TV, and YouTube. We'll continue this conversation. We're going to count you down to the close. I am. I don't know about you, but I'm pretty happy.
Oh, okay.
Okay.
Whether or not we're family, Romaine, we're family.
No, we're family.
We are. Beyond the Bell at
I'll
4
give her that
p.m. All right, guys, we'll be back.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week. We're going to head back to our TV colleagues in just about 50 minutes' time to count you down to the close. It is definitely an interesting trade, a different tone over the last couple of days, as we just talked about equities rallying, yields backing off. I do think it's interesting. We heard from Gina Martin-Adams. We heard Jess Menton talk about, reminding us what Gina said about the breadth that we had seen in terms of the sell-off. What was it? Something like 93% of the stocks in the S&P 500 last month were down, among the 10 worst months since 1990. So there was breadth in terms of selling, which, when you think about market capitulation on the equity side of things, these are the things that you look for.
There's also something to think about, Carol, is that the Fed meets again in just about a month. So November 2nd is when we hear from the Fed.
Right?
Well, it is crazy, and the crazy part is that's
crazy.
not
That's
even the second. That's the second to last meeting of the year. What I find really fascinating is that there's actually not much big data that happens between now and then before that next meeting. So yes, you have one jobs report, you have one CPI report,
Right.
And then the typical other data that we get, but it's not necessarily a lot of data that the Fed has to be data dependent.
I do wonder, too, it comes just before the midterm. So how does that...
Oh, but these are not politicians, Carol.
Really?
I don't know. I mean, they're appointed by politicians. They're not voted in.
I love that ivory tower that you...
Do you like how I'm so not cynical?
No, I do love it. I just don't wonder... I know they're not, but I do wonder how that could possibly play into how they're very careful about what they say.
I like these new seats.
You like
them? We're so much closer.
You did. He moved over one seat. I don't know how I feel about it. No. I love it. All right, right now, let's get back to world and national news. On it for us, as always, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. The Supreme Court is weighing whether Alabama's congressional map violates the federal voting rights law. In a state where blacks make up 27% of the population, there is only one majority black district out of 7.
Alabama lawyer Edmund LaCour said of the lower courts,
they argued the Voting Rights Act requires Alabama to replace its map with a racially gerrymandered plan.
Justice Samuel Alito suggested a second black district would have to stretch unreasonably across the state. Justice Elena Kagan countered,
you're looking at a state where there is incredible racially polarized voting, where there is a long history of racial discrimination in the state. Under our precedent, it's kind of a slam dunk.
Justice Kenji Brown Jackson cited a century of civil rights laws that she said are still needed today. In Washington, Irv Chapman, Bloomberg Radio.
Micron is making a huge financial commitment in New York and plans to build a chip factory in the state. Governor Kathy Hochul tells Bloomberg it is a landmark deal.
There's never been an investment this big made in the state of New York. Over $100 billion over the next 20 years to build something that is something quite extraordinary, that this will be the home and the manufacturer of the largest semiconductor manufacturing facility in the country.
Governor Hochul says the factory will be built in Clay, north of Syracuse, and will generate about 50,000 jobs in the state. Well, the U.S. is pledging new support for Ukraine. President Biden told Ukrainian President Volodymyr Zelensky during a phone call today the U.S. will continue to support Ukraine for as long as it takes. He pledged a new $625 million security assistance package. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. I want to get right to it because we've been talking all about that Bloomberg exclusive that Elon Musk was expected to proceed with his deal to buy Twitter. Well, I am looking at the SEC filing, and Elon Musk does confirm the plan to proceed with that Twitter deal at $54.20 a share, which was the initial price that he had put out. He does this letter that he filed with regulators saying the proposal is contingent on a trial being adjourned. He provided the Delaware Chancery Court enter an immediate stay, and the offer is contingent on receipt of proceeds of debt financing.
We should note that shares of Twitter are still halted pending news. At one point today, shares were up as high as 17.5%, but still, even before they were halted for trading, Carol, they were trading below the $54.20, which is, I think, bigger than sort of ARB, right? The idea that there's still some belief that it might not happen.
Yeah, I
Again,
guess,
news pending, you know.
Yeah,
it's still halted, but
right, exactly. Well, I think, you know, because we just got the filing, and I would assume that maybe because it is now out there officially, that we will ultimately start to see shares of Twitter trade higher. They were up about 12-13% ahead of the news and before all of this came out. But he confirms, again, Elon Musk confirming that he sent the letter to Twitter to proceed the closing of the transaction. This is that amended 13D filing with regulators, and again, to proceed with the deal.
I'm also looking at shares of Tesla because they were up as high as 6.2% earlier in the day. When this news came out, shares fell, shaved off about 6%. Right now, trading at $1 or 1.95% to the upside.
Well, let's not forget, it's a $44 billion deal. There are questions about how he finances this and what, you know, shares or Tesla shares he might have to sell in order to put this through. So, you know, not surprising to see Elon Musk as the acquirer and that thought of selling of Tesla shares that would certainly potentially impact that company.
$54.20 per share. Remember, that's a valuation when the markets were at a much different place.
Yeah, the stock, when it was halted, was at 47 and change, and it was up about 12%. So we'll wait for that to resume trading. All right, this is our top business story at this hour. We'll have more in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. Elon Musk is confirming a plan to proceed with the Twitter deal at $54.20 a share. Twitter shares do remain halted. Last trade, $47.93. They were up 12.8%. Tesla up right now by 2.4%. The Dow, the S&P, and NASDAQ all surging. Back-to-back big gains for stocks. But let's head right over to the first word breaking news desk for today's afternoon call. Lots going on. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are surging today, helped by a dovish surprise from Australia's central bank overnight. Dow's currently up 690 points. S&P's gained 96, and NASDAQ is higher by 2.9%. The U.S. 10-year yield at 3.62%. Gold is up 25. Energy is in the green, and Bitcoin trading higher by 1%. Among the main 11 S&P sectors, all are trading in the green, led by energy and materials. And in the Dow, leaders were Caterpillar and Boeing, while modest losses for Coca-Cola. In deal news, you mentioned Elon Musk. He did confirm his plan to proceed with the Twitter deal at $54.20 a share. In other news, Hasbro cut its fiscal year 2022 sales forecast. And wrapping things up, Smart Global reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We'll have more on the Twitter story and Elon Musk's pursuit of the company. Of course, Twitter shares, as Charlie mentioned, still waiting to begin opening. But again, we'll talk more about this with our Ed Ludlow in just a moment. Meantime, waiting for Twitter to resume trading. We have been watching oil, though, rallying for a second day today after OPEC Plus said it was considering an output cut of as much as 2 million barrels a day. That would be 1 million barrels higher than previously anticipated. Tim, we know energy as an equity play. I mean, first of all, energy is a big macro story of our time, but as an equity play, it is the top performer in the equity universe this year.
Yeah, what does the fourth quarter, though, look like specifically for those midstream firms in this inflationary environment? We turn to Stuart Glickman, head of energy research at CFRA Research. He joins us once again on the phone from New Jersey. Stuart, how are you?
Good. Thanks for having me, Tim.
Yeah, it's good to have you back with us. Hey, talk about a little bit about the news that we're seeing from OPEC Plus over the last 48 hours and the way that we've seen oil rally, because it's not actually it's rallying because of production cuts. So talk a little bit about how you're interpreting that, or potential cuts, I should say.
Yes, potential, because there's a lot of intrigue as to how much OPEC is actually going to be cutting. But for their first in-person meeting in more than 2 years, I think people are expecting something of import is going to happen. And I think what's going on here is that the OPEC Plus consortium got quite accustomed to oil being north of $100 a barrel, and they've watched it dissipate pretty quickly, pretty dramatically, down from 120 or so per barrel down to below 80. And I think they're trying to ratchet it back up again.
So talk to us, because I do think what's really important to the energy equity trade right now is the macro story. And I was listening to, I think it might have been Bill Smead earlier on with our surveillance team this morning on radio and TV, or radio specifically. And just that with this pivot that we're seeing in the energy space, it means that there's going to be, limits on exploration and so on and so forth, but that does ultimately mean higher prices, which is going to benefit everybody along the energy supply chain. Is that part of your thinking here, Stuart?
So it's certainly part of it, Carol. Yes, longer term, there's going to be a transition away from fossil fuels towards renewables, but the supply tension that we're seeing, the fact that spare capacity is thin, this is a problem that's been brewing for about 7 years now. The industry has been kind of systematically underinvesting in new supply, partly because oil prices didn't merit it. With oil prices for the better part of the last 7 years were pretty mediocre or worse. Mm-hmm. And then also, some of it is quite honestly coming from institutional investors, which told the industry repeatedly that they would much rather see them focus on returning cash to shareholders in the forms of dividends and buybacks, and less about growing the number of barrels they're producing. And so those companies listen to what their institutional investors were telling them, and here we are.
Stuart, I want to talk big picture here and help us understand where we are when it comes to the energy transition here. Because I think that a lot of people this year might have learned kind of the hard way that we're not as far along when it comes to the energy transition as many people thought. What's your view on that?
Yeah, I think it's a great question, Tim. I think that Russia and its invasion of Ukraine really kind of illustrated for all of us just how important fossil fuels are, particularly for Western Europe, which gets around 30% of its crude oil normally from Russia and about 40% of its natural gas. And when you have taken steps like closing down coal mines and shutting down nuclear plants, with some countries in Europe have done, and anticipated that you could replace those with renewables, and discovered that it's not quite that easy because there is intermittency with renewables. The wind doesn't always blow as hard as you expect it to, and of course the sun doesn't always shine. It's difficult to replace all that. And so now we're seeing a backtracking, and I think one of the reasons that natural gas prices, for example, have exploded is because everybody is trying to secure natural gas as the easiest way to replace missing Russian hydrocarbons.
All right, so that leads you to a name like Cheniere, ticker's LNG. It's up 67% this year and obviously plays in the midstream space. Why this one, and how much upside potential is there then for a name like this?
Yeah, we like Cheniere a lot. We've liked it for most of this year. And they have arguably kind of an early mover advantage in midstream. It takes, even if you were to break ground today on a brand new LNG facility with your construction team, you're probably looking at a good 3 years before it's actually operational. So Cheniere, by virtue of having, built out its facilities, a lot of them anyway, for the better part of the last decade, is in position to do just that, to provide additional natural gas to Europe or to Asia, as the case may be. It takes most of the natural gas that they produce, or that they sell and transit to overseas. A lot of that is spoken for on long-term contracts, but they do reserve some of it for spot cargoes, and they're taking advantage of that, and their cash flows are skyrocketing this year.
Yeah, you can certainly see it when you check out the balance sheet. Stu Glickman, thank you so much. Stuart Glickman, he is head of energy research at CFRA Research, joining us on the phone from New Jersey. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we are not waiting on Godot, but we are definitely waiting for shares of Twitter to resume trading before or at, when it was halted, it was up about 12.5%, but we're waiting for more news on expectations, right? We know that Elon is planning to go through.
Yeah, $54.20 a share. We're going to dive into it in just a few minutes. Ed Ludlow, West Coast correspondent for Bloomberg News, is going to be joining us. First, though, Charlie Pellet, we have got, less than a half hour to go in today's trade.
And I'm looking at a lot of green on the screen. Let me reset before we get to Ed on Twitter. Again, as Carol mentioned, we're waiting for the stock to resume trading. Elon Musk reviving his bid for Twitter at the original offer price, $54.20 a share, potentially avoiding a courtroom fight over one of the most contentious acquisitions in recent history. Again, we've got Tesla shares up now by 2.4%, but we are still waiting for Twitter to resume trading. The Dow, the S&P, and NASDAQ very close to session highs on the S&P, up now by 97 points. That is a gain of 2.6%. Perhaps the key takeaway, though, a massive two-day rally. Stocks and bonds rallying from oversold levels. Traders weighing whether it would be realistic that central banks moderate their aggressive stance to prevent a hard landing. The Dow, the S&P, and NASDAQ all pushing higher. S&P again up 2.6%. The Dow up 2.4%, up 700 points now. NASDAQ up by 3%, up by 319 points. Ivy Jack is head of equity research at North Star Asset Management. She is not too hopeful about a sustained rally for the stock market.
We will probably have many bounces, but we're still very cautious. There are many things going on right now, and I believe it is really hard to sustain any kind of optimism at this point in time.
10-year yield right now, 3.61%. 2-year yield, 4.09%. Spot gold up 1.5%, $17.25 the ounce. West Texas Intermediate crude up 2.9%, $86.06 a barrel on WTI. Ford shares driving higher after the car maker's latest quarterly sales results showed growing demand for its lineup of EVs, including its flagship F-150 Lightning pickup truck. Ford rallying 7.2%. Other automakers higher today as well. We've got GM up now by 8.4% and Stellantis up now by 5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you know the big story, the Bloomberg exclusive, Elon Musk reviving his bid for Twitter at the original offer price of $54.20 a share, potentially avoiding a courtroom fight over one of the most contentious acquisitions in recent histories. Musk making that proposal in a letter to Twitter yesterday, according to a filing with the SEC that confirmed that Bloomberg report.
Yeah, Bloomberg getting the scoop this afternoon, and we are now seeing this actually happen despite the fact that Twitter shares are still halted for news pending. With us right now, with all the details and more, is Ed Ludlow, West Coast correspondent for Bloomberg News. He's with us right now in the Bloomberg Interactive Brokers studio. Ed, you've been on this story since day one. Give us the latest here.
Yeah, I mean, it seems a little bit like Musk throwing in the towel, right? You know, as we know now from the amended filing confirming our Bloomberg scoop, he is essentially going back to the original terms agreed in April, $54.20 a share. Why? I know you. I mean,
okay, I'm looking at you.
You're shaking your head.
I'm shaking my head because
you're asking for this to be logical and for me to get into the psychology of Elon Musk. I can't do that. All we know is what we know.
Well, we know that the market has completely shifted since the spring of this year, since the winter of this year. I mean, tech companies are not valued what they were. The online advertising market has gotten hit really, really hard. How is he maintaining $54.20 a share?
It's fascinating on the why. You know, Twitter has been subject to an acquisition, so the stock is traded completely artificially. You know, it has at times gone down towards $30 a share. You know, we've now seen this big spike before it was halted as the spread closes on the deal. But ultimately, think about what the market saw happening. Merger arbitrage specialists, stock followers, Wall Street, M&A lawyers. They all said that if this went to trial on October 17th in the Delaware Chancery Court, the chances were, Bloomberg Intelligence said a 70% odds, 70% chance, Musk would lose. and that the judge would enforce him to the original terms of the deal. They had a signed contract. And
well, that's why 5420, right? I mean,
exactly.
He signed a deal and, said he was going to do this. So for him to kind of start backing off on any of it is difficult. I want to ask you, Ed, I guess one of the things, you've looked at this SEC letter. I've got it in front of me. We're all making, sense of it. The offer is contingent on receipt of proceeds of debt financing. Offer pending receipt of debt financing proceeds. Tell me what that means.
Yeah, so Musk secured $13 billion of debt, right, as per the original package. That includes a $500 million revolving credit line, very standard for banks to give that to clients, $6.5 billion loan, $3 billion of secured bonds, $3 billion of unsecured bonds. Musk goes to the banks and says, I need you to sell these to asset managers. The difference between now and April, when that package was secured, the world is a very scary place, and this is risky debt, right? This is leveraged buyout stuff we're talking about. And I think that nod in the filing is that actually it's going to be a lot harder to shift. It's going to be a lot harder to get debt investors interested in this deal than it was at that time.
Does that give him an out? Technically?
I don't think it
legally?
does. I don't think it does give him an out, technically or legally. By the way, we've got some headlines crossing the Bloomberg. Sources have told me that Sean Edgett, who's chief legal counsel in Twitter, has basically sent a memo to staff saying, we are going to move forward at $54.20 a share. Please bear with us while we work out the legalese of all of this.
That's the Twitter lawyer.
The Twitter lawyer, general counsel.
We've done a lot of reporting as a newsroom on the tumultuous time at Twitter as a company, Ed. And I'm wondering what you can bring us about what this means for employees there now that there actually is some certainty. It's kind of a, people like certainty.
Certainty in some sense. Musk was divisive. Many staff were unhappy about some of the things he said and his behavior. As we know in the exchange of text messages disclosed as part of the discovery in the court filings, Parag Agrawal, the current Twitter CEO, did not appreciate the negative things that Musk was saying about Twitter on Twitter. But as a company, they've been frozen. Literally frozen hiring. They've restructured to move resources to teams that they thought would fare better, and they've not been able to enact real change other than the keen-eyed of you may have noticed that an edit button is in trial in markets like Canada, Australia, and New Zealand.
Saw that, I'm a little jealous.
I think a lot of them have been braced for this. The uncertainty is, A, when does the deal close? Could be very quick if you look at the wording of the original agreement, and B, what does he do when he comes in? What does he actually do to change the platform?
Yeah, I feel like there's so many different questions. I mean, is there a bottom line that at this point Twitter is a bruised asset? Is that the expectations, or not the expectations, but the perception out there among bankers, among the street? I mean, how do they see this asset?
So ultimately, it's kind of academic at this point. It's a take-private deal. And if the deal goes through at $54.20 a share, existing shareholders got a pretty nice premium.
Yeah.
And they must be they'd bite your hand off for that, wouldn't they? Let's be honest. What a great deal for shareholders. Musk, in the exchange of text messages with Jack Dorsey, for example, Twitter's co-founder, that we found out as part of discovery, they believed that really big changes are needed on this platform. And they felt that the only way to do it was if it was a private company. That's what we know.
Well, he certainly uses it a lot, Elon Musk. More to know, but certainly a lot of news thanks to that Bloomberg exclusive and more. Ed Ludlow, you've been on it. Thank you so much. Bloomberg News West Coast correspondent Ed Ludlow here in our studio.
Let's get to Washington, D.C. for world and national news. We got Nancy Lyons standing by. Hey, Nance.
Thanks, Tim. U.S. officials are condemning North Korea for its latest ballistic missile launch today that sent the weapon directly over portions of Japan. White House Press Secretary Karine Jean-Pierre.
The launch was a danger to the Japanese people, destabilizing to the region, and a clear violation of the United Nations Security Council resolutions.
Jean-Pierre says they're asking North Korea to refrain from further provocations. The political landscape could be changing in Georgia after a report that Republican Senate candidate Herschel Walker, who is against abortion, paid a girlfriend to have one. Bloomberg's Washington correspondent Joe Matthew with details.
The report says the woman provided the check, the card, and a receipt from the procedure. Walker is not having any part of this. He's issued a statement, says, I deny this in the strongest possible terms. He went on Fox News last night to talk about it as well. Says he doesn't remember this woman and that he sends money and cards to lots of people.
Bloomberg's Joe Matthew, the host of Sound On, coming up at 5 p.m. Wall Street time on Bloomberg Radio. Former Trump White House strategist Steve Bannon has been given a trial date of November 23rd on charges that he defrauded contributors to a U.S.-Mexico border wall out of more than $15 million. The charges relate to We Build the Wall, a group founded by Bannon and others that used private funds to construct about 5 miles of border fencing. Country music legend Loretta Lynn has died.
When I was born
She was 90 years old. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Well, I got to tell you, this is when I really, really, really love the Bloomberg terminal, because you can watch when a stock is trading actively, man, the numbers just come alive. And that is what's happened when it comes to shares of Twitter, which have resumed trading after, I believe, 2 halts today. Stock is up more than 21%, up more than $9 in today's session. The high so far up almost 23% for almost a $10 gain.
Okay, but Carol, it's still not trading at $54.20. It's at $51.90 and change right now.
Not there.
It's not there. We talked about this for the past few months.
Which is the magic number, what Elon Musk initially offered for Twitter and now has said he'd come back and pay for.
Exactly. So there's still some disbelief that the deal happens, and some of this is natural, arb, but at the same time, it shows that investors are not 100% there.
So I do wonder, is this just investors who have watched what a crazy trajectory this story in terms of an M&A deal or acquisition, I should say, how it has played out since Elon Musk initially announced it and then so quickly backed off of it. And then there was worries about financing and share dilution of Tesla shares if they had to be sold in order to help finance. I mean, there's just been so many twists and turns in this story. And then you have that Bloomberg exclusive earlier today that said, okay, Elon Musk sending a note to Twitter and saying he's going to go ahead with this deal. And then, of course, we got the SEC filing confirming it. But you're right, the market's still not necessarily buying it completely. And you wonder, okay, what's the next shoe to drop? And we just talked about it with our Ed Ludlow in terms of the debt financing. Very different market in terms of financing the deal right now with all the market volatility.
There was some really
costs.
Well, so as the discovery process went on over the last couple of weeks, we got a peek into the private text messages that a lot of billionaire men had sent to Elon Musk.
Yeah.
People who wanted in on the deal.
Ex-wives.
Yeah, I didn't know about that one. That one wasn't in the article I read until today.
Gail King, can I get the interview,
That's right.
Elon?
She wanted the interview.
I mean, it's just...
But there were a lot of people who wanted
Yes.
to help with financing, so I'm interested to see.
Or he at least reached out to them, right?
They reached out to him.
Yeah.
There was some unsolicited. It was really interesting.
All right, so stay tuned, guys. This isn't over, but nonetheless, Twitter shares up 21%.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Headline from the Bloomberg Professional Service. President Trump, former President Donald Trump, turning to the U.S. Supreme Court in his fight over the Mar-a-Lago documents. Right now, the Dow, the S&P, NASDAQ all surging. We have got Twitter shares resuming their trading. Twitter right now is up 21.6%, Tesla up 2.4%. The day's big business story here, Twitter jumping after resuming trading. The company aims to close a deal with Elon Musk. Again, right now, Twitter surging now by 21.3%. Stocks and bonds rallied from oversold levels. Traders weighing whether it will be realistic that central banks moderate their aggressive stance to prevent a hard landing. The 10-year yield, 3.61%, 2 years at 4.09%. S&P up 101, higher by 2.8%. The Dow now up 745, up 2.5%. NASDAQ up by 3%. Spot gold up 1.5%, $17.25 the ounce. West Texas Intermediate crude up 3%, $86.10 for a barrel of WTI. Recapping, Twitter back up and running. Twitter shares up now by 21%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Pension funds are supposed to be among the least exciting financial institutions. Yet last week in the UK, they were the center of an incipient financial crisis. What led to this was a variation on a well-known theme: leverage meets unforeseen events. The danger when these two collide is not confined to any one country, so regulators everywhere should take note. While the world's banks are somewhat safer than they were before the crash of 2008, risks that start outside the traditional financial system still require greater attention. The more leverage held by non-banks such as pension funds, hedge funds, and insurers, the greater the dangers. Regulators need to remember that low probability events aren't zero probability events. Eventually they happen, and when they do, they can cause serious harm. One day, if regulators do their job, pension funds will be boring again. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
I don't know about you all, but I feel like I've had like a million cups of coffee, and I haven't today.
That is called the endorphins from Twitter.
I think you're right.
Seriously.
It's like...
You know, it's been a while since we've had an entire show blown up, just about an hour before it started.
I know. The Bloomberg exclusive on Twitter, this deal like that has just been, the story that keeps on giving, and the stock is up 21% as we heard from Charlie. But anyway, we'll talk more about what.
Thank you to our production team.
Yeah.
Yeah, I mean, everybody in there who, totally redid the whole show when we got this breaking
news. Even you, Paul Brennan.
He's giving us 2 thumbs up right now.
All right, let's talk about the markets, because we certainly have equities. They're off their best levels of the session, although the S&P is pretty much close to it. But nonetheless, we're talking, strong gains, another rally, strong 2-day rally that we haven't seen the likes of in about 2 years. So let's get to it, see what our Drive to the Close guest has to say.
We're very pleased to be joined by, once again, Sylvia Jablonski. She's CEO and CIO of Defiance ETFs. Sylvia joins us on the phone from New York City. Sylvia, how are you?
Hi, great to be with you guys. I'm pretty good. How are you doing?
We're doing pretty well. I mean, I don't want to sound like a broken record because the last time we spoke, I asked you this exact same question, but here we are. Is the bottom in for the year?
It's the kind of year where you can kind of keep asking the same, because it keeps coming up, right?
It does.
Yeah.
Sylvia, what do you think?
Yeah, it sure does. I think I'm sort of in line with where I was before. So I think that we probably saw the bottom or pretty close to it. We could retest those levels or go a little bit lower. So maybe not the exact bottom, but certainly within range of the bottom, closer to the bottom than not. Let's just put it that way. But I do think in the short term, we've got a little more rockiness coming our way. This feels really good the last couple of days, but I'm not yet convinced of it.
Okay, so why do you say that we've seen the bottom or we're close to it, and that we're closer to it than not? What metric out there says to you, yep, this is it?
Yeah, so that's a great question. And I think that, everyone's kind of got their measure on this. But I think that, what we're seeing now is that real inflation is actually starting to give. You're starting to see it in rents, you're seeing it in cars, you're seeing it in lumber, you're seeing it in different parts of consumer pricing. I do think that people have gotten so overly pessimistic. Your listeners and the traders and investors out there are showing up as having the worst consumer sentiment in almost decades in some cases. So I think that, that's part of it. Then you start seeing things like, Apple stock and Tesla, kind of the darling, and not everybody would call Tesla a darling, but I sort of would in terms of performance compared to
Elon
the
Musk
market
does.
this year.
No, just kidding.
Yeah, he sure does. Yeah.
Sorry, go ahead.
When you see those names, those quality names that everybody on the planet, holds, really kind of shake out for a couple of days. I think if I had seen that for a couple more days, I would have felt a little bit better that the low has happened. But, seeing that kind of pessimism priced in was also a sign for me. You've got gas falling, you've got mortgage rates that are ridiculously high and going higher, sky high dollars. So there is this evidence that we're a whole lot closer to a bottom than we have been in recent months. And, I think that maybe we'll have some more pain in the near term, but it's getting there.
I haven't heard you say anything, though, about the Fed conversation, which there's been a real drumbeat of more higher rates, although there are some, I know we've done some reporting about, some of them, the Fed speakers saying that, but also saying we're watching financial market conditions. We're talking maybe about, rates, the peak happening early next year and maybe, standing pat. So is there something in the Fed conversation that also makes you think that too?
Yeah, I think some of the rhetoric is loosening up a tiny bit, but, I think one thing that, one conclusion that I've sort of come to is that, the Fed is being very sort of strict and transparent with the language. And yes, things could change. We saw what happened in the UK, but, at Jackson Hole, the message was we're going to stay higher and be, he was essentially just indicating that he would be persistently hawkish, the whole Fed team would be persistently hawkish, and that, it would be a mistake to kind of pump the brakes. So, my sense on all of this is they're obviously seeing the same data we are. They can't possibly be ignoring real inflation falling and some of the topics we just spoke about, but I also think that pulling the trigger would sort of lead to some, controversy or volatility in their plans. So I do expect another Fed hike or two. Maybe they'll be lower than expected. And I think that's when, when we get the Fed coming out actually saying, okay, now it's the appropriate time to pause, or the rate is lower. Let's say it's 50-25 or 25-25. I think that's when the market really starts to kind of like rebound for the longer term.
Sylvia, is this a buying opportunity, especially for some of your more sort of high-flying ETFs?
Yeah, absolutely. So I think, I'm sounding a little bit pessimistic in the short term just because I think that, what goes up can come down, and that's what we've been seeing for the last couple of months. But if you look at these charts, since the 1950s, when you've had 25% or more pullbacks in the S&P 500, a year or so out, 2 years out, 3 years out, you start seeing those high double, triple-digit returns, right? So I do think that this is a great investors market. So investors looking with for a portfolio that they're planning on holding for 3 to 5 years, even young people, 401k, dollar cost averaging for however many years, 40, 50 years till they retire. These are sort of generational lifetime types of opportunities, and that can't be ignored. That's the positive in all of this. Short term, sort of who knows? It's going to be range-bound volatility. It's going to be difficult to trade. Medium term, again, we need maybe earnings to come down, the Fed to pause a little bit. We don't have clarity there, so it's going to be a little bit of a slog, but long term, this is a phenomenal opportunity to get into the names you love at reduced valuation.
Sylvia, I don't even know if they have target date funds that go 70 years out. Is that how long we're going to be working?
Well, they weren't that good anyway.
Is that how long we're going to be working?
That's a really good
50 years out? Oh my goodness.
Yeah. I mean, I think target date funds are just companies that will continue to innovate for decades and shake it up, if you will. Those are the companies that do well out of these crashes.
Sylvia, really, really quickly, 15 seconds. Where's the money flowing into your ETFs? Where is it coming in right now?
It's coming into hydrogen, alternative energy source. We need oil, we need gas, we need to kind of be on top of that, but we also need a solution for the future. And globally, we're committed to climate change, so hydrogen plays a big role, and we're seeing the assets flow in there.
Very interesting. All right, Sylvia Jablonski over at Defiance ETFs. Thank you so much. All right, folks, it's time to head over to our TV colleagues for Beyond the Bell, live on radio, TV, and YouTube. We're counting it down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Boston, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with the laughing Carol Massar and the stoic Tim Stenovic. We welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube. Another everything rally, I guess, here, Carol. Pretty much everything.